Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
Today we have Tom Cruz, not that one. We got Tom Cruz, the real estate investor, and we'll get all into him shortly.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, August the 17th. And before we get to our guy, Tom Cruz, to tell us all about Section 8 housing and how to make money on it, we always do This Week in the Market. You know it. It's 2:30, and I'm just looking at Fubo. It's fucking awesome. It hit like $7. It hit $8 today. And I had a bunch of calls in my TDA that they fucking canceled. So I just really wanted to give a big ass shout out to Thinkorswim and TD Ameritrade for canceling that account, and shout out me for not buying the same calls. Again, I fucking love seeing stocks I had go up 40% that were in a long account. It was just super dope. But whatever, dude, I'm over it. SPY hit 432 today. Past 430. Big point. Y'all talked about it. It's fucking crazy that just what was it? 2 interviews ago, we were saying if we get past 407, and look at us now.
Yeah. I mean, it's just really incredible. Spied like and honestly, like we hit the 200-day moving average, and we didn't sell off as bad. Like we sold off $2, but in hindsight, that's nothing. Like that's really nothing. So if we really do manage to break over the 200-day moving average and hold there, we have a real opportunity here to make a run for that 450. I mean, like a serious opportunity. Which, with the way that the market's been acting, hell, we could be there by the end of by the end of the week. End of next week, which is just incredible. I've been trading these moves more. Just because, why not? Like, there's been so many trends, and even if we gap down or we gap up, we've just been going higher. So, yeah, it's just incredible.
Has the market just turned around? Like, is it just keep coming? Are we waiting for bad news? Is the inflation thing, like, what's causing this? It just seems like we're going up too fast. Like, if you would have said this 2 weeks ago, that we'd be at 430. Like let's say August 1st, you said on August 15th we'll be at 430. You would have said either A, you're nuts, or B, well, then it's about to be right back at 410 tomorrow.
Yeah, we definitely need a pullback. However, this is like what we talked about with NASA about getting over that level and holding there, and that's what we've been doing. And so really
talk about NASA
right
the
now,
interview, not NASA the fucking space company.
Yeah, when we went to NASA.
Rockets. We have to get past the ozone before,
They invited PGIR.
Yeah, SpaceX. We paid the $250.
Yeah. But essentially, right now we're inside a limbo stage, and that's why I don't want to go too deep into it until Sunday, because we'll know more. Like right now we're just testing the 200-day. I want to see exactly what we do up against that 200-day into the end of the week.
All right, so We're looking for the 200 day. Are there any catalysts that could come up that can fuck it up? Obviously, we got earnings, feds, all that shit, all of that out of the way. Or do we need to worry about something?
Well, it's still, we have like, CPI data readings and Fed, that's always going to be a thing until honestly the next 14 to 16 months, in my opinion. That those are always going to be important. So yeah, that's essentially, what I want to see. And then we'll go from there, But like I said, is that through the end of the week, it's going to be that 200-day moving average that's important.
All right. Well, right now, 430, definitely what we wouldn't have expected before. Are you seeing any sectors or anything that are really catching your eye right now as something that we can keep watching these as things go on? Or is it just everything's just on piss missile mode?
Yeah, I mean, the biggest thing is that, and we talk about this a lot, is that when the market does well, growth does the best. When the market is going down the gutter, I mean, fucking growth is in hell. And that's the way that it works. And so if you look at all these different, and a lot of people call them like the Cathy stocks, all the Cathy stocks are up 150% over the past 2 weeks. I mean, hell, Roku is hang on, sorry, I have like 15 screens up. Roku's at 84. I mean, that thing was at 400. But again, you have to remember is that not too long ago, Roku was sub 670. And so that's what I mean is that, even though it's up 20% inside the past few weeks, I mean, this thing was trading and not even at its highest. Okay. Just this thing was trading a year ago. So again, not even like its highest ever, but a year ago, it was up inside the 300s range, even higher, like 361. And now it's down to 84. So if you were to think about it like that, you're like, oh shit, like that thing really got smoked. But then if you look at it on the shorter time frame, you just look over the past 3 weeks, you'd say something along the lines of like, oh, I'm not touching that thing. That thing's up too much. And so that's why I think like, we are still inside a pretty, like now that we've broken out of the smaller range, we're inside this bigger range. And so we either need to get up above the 200 and hold over, or we need to get up and fail back down. And then we'd be looking at, we'd be looking probably closer to like 380, something along those lines.
All right. Well, now, guys, we have a very special guest for you. It is Tom Cruz, not that one. TikTok, Section 80, Section 8, housing, market, stuff like that. He's going to tell us all about it. We actually had some good questions for him, I think, from actual realtors. So hope you guys enjoy, and we'll see you next time. Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, August the 17th, and we have a very special guest on today, Tom Cruz. I would love to say 1 million TikTok followers, but 987,000. You're getting super close. We got you on. Do you kind of want to give us a brief little description of yourself before we kind of dive all the way into what you really fully do?
Yeah, my name is Tom Cruz. I'm originally from Brazil. I live in North Carolina now, and I am a full-time real estate investor. I focus on Section 8, or low-income subsidized federal housing. I have about 600 rental units in 4 states, and I also teach about it on my social media channels on Instagram and TikTok. I also have a course that I explain kind of how to do it, how to get into it, and pretty much how to get guaranteed rental income on your properties.
Yeah, and so I know you just mentioned Section 8. We talk about, right. I think, can you kind of dive into that just a little more for the people that don't quite understand it?
Yeah, Section 8 is essentially a federal subsidy, meaning the U.S. government will help low-income individuals pay their rent. So if you have a rent that's $1,400, the government will guarantee, let's say, $1,300 out of that $1,400, and they'll just direct deposit it directly into the landlord's account. And the tenant will pay the remaining $100 balance. And really the only kind of catch there is to it is there's an annual inspection. They pretty much make sure that you're not being a slumlord, make sure you're taking care of the property. And if you pass that inspection, they can continue to, pay you. So that's essentially Section 8 in a nutshell.
So the pros and cons of that beyond just annual inspection and extra $100, could you kind of go over some pros and cons of it?
Sure. So, the big pros are going to be guaranteed rent. The biggest problem when you're dealing with any type of tenant is collecting the rent on a monthly basis. Even the best screened tenants in the event of unemployment or a pandemic or recession, people lose their jobs all the time and can't pay their rent. So you avoid that. For example, during 2020 in the pandemic, everyone was at home, laid off, losing jobs. We probably had our best year ever during 2020 because nobody was moving out. So there's no turnovers, everybody was staying put, and we continue to get paid. As far as other pros, is people stay there long term. Our average tenant will stay in a property for 6 years versus about a year and a half on a student unit or a other standard market rate rental unit. And like I said, the only real con is going to be dealing with inspections. When you have a regular tenant, you have no oversight, no inspectors coming there annually to make sure that you're doing what you're supposed to be doing. But it's an hour a year per unit, so it's really not that big of a deal.
So it's like having a child protective service, but for a rental house, basically.
Exactly. Yeah. And they just check to make sure it's secure and stable and sanitary. Those are kind of the three things they look for.
Is this something safe? Is something that someone can do as like a side hustle kind of thing? I know this probably for you, obviously it's one of your main thing, but obviously come from a personal finance podcast side of things. How can you get started? I mean, obviously not 600, but if you wanted 10, if you wanted 15, where do you even go? Like, where do you start that?
Yeah, so I mean, you don't need to make it full time. You could definitely do a few hours a week. The most time consuming part is just finding the unit. So depending on how you're financing it, if you have some cash to put down, then you can just use a regular bank and the time requirements go way down because you don't have to spend time finding an off-market deal and dealing with creative financing and seller financing or anything like that. So yeah, I mean, you could buy your first unit in the next 45 days and be cash flowing. On average, I cash flow about $550 per month per unit. So you just have to back into how much money you want to make and how much you have for down payments and go from there.
So it feels like, I think that you said it's about $550 a month. Are you typically going for, like, what's your house range when you're going to buy something? Are you trying to put a little bit of work into it, or is it, you already want this to be in tip-top shape?
Yeah, we never put more than $5,000 per unit. So the vast majority of them are pretty much turnkey or almost ready to move in. That's really what we target, because then you can move people in way faster and you don't have to deal with big unknown expenses if the unit's already been ready to go.
Yeah, no, I mean, I feel like there's so many people like just whenever they're getting tired of their job, they're automatically just, hey, real estate. You have bartenders or just whatever. Hey, I'll get my real estate license. Everyone else is doing it. I mean, hell, my dad was a real estate agent for years, and whenever someone asks him about, like, at Thanksgiving, hey, how's Murray? Just same answer, like, yeah, up and down. Like, I don't even know if he was a real estate agent. What is the step of like becoming, like, going from just having that real estate license and posting shit on Instagram to actually making this something where you're like, hey, I can do this, to like the transition of just, hey, I have some shares of some stock. I like Amazon. I like Roku. And transitioning it to, damn, okay, now I'm trading. Like, where does that come in?
Yeah, so the first thing there is I'm not an agent. I have no licensure in any state in the country. I'm simply a real estate investor. So there's no transition for me. You don't need a license to buy property anywhere in the country. I simply, as far as maybe if you're asking about transitioning from one hustle to real estate, it's relatively straightforward. As long as your credit is somewhat decent, I would say over 600, most lenders or at least hard money will work with you. If you don't have the credit or if you don't have the down payments, then the best way is going to be creative financing and seller financing. As far as getting started, the best thing is simply that's going to have a lot of properties in decent condition at a low rate, and they exist out there in the Midwest and the Southeast. There's always, there's people that come here and go, I live in California, I live in New York, I can't buy anything for $100,000 here. Well, yeah, obviously, buy somewhere else. I think these people get so stuck in where they live that they forget that there's other, 47 states in the union. So, there's a lot of other properties that are under $100,000 that are move-in ready, that 3 bedrooms that Section 8 will pay $1,400 a month for, and you can cash flow for, maybe putting 10 grand down, 8 grand down.
Yeah, I think actually the next question was going to be, how do you finance the acquisition of the property, and like, have you like seen or foresee any difficulties on the acquisition side?
I mean, at the beginning, there's always just kind of that learning curve to figure out what the lenders are needing or requiring in order to get the deal done. So I would say at the beginning, I use credit unions and I use local community banks to get started. and they ask for tax returns. If you're self-employed, they ask for a little bit more work or more documentation. If you have just regular W-2 full-time income, you send them your W-2, send them the down payment, proof of funds for the down payment, and then for the most part, you're good to go. As you scale past 10 units, that's the max allowed by Fannie Mae or Freddie Mac under your personal name, then you have to go buying into an LLC, in which case you simply just get commercial loans at that point. And it becomes actually a lot easier than when you're dealing with residential loans with Fannie and Freddie.
And I was actually watching some of your videos, and you kind of had some of this, like almost a Gary V at an auction, like at a garage sale, but for for homes, where you were saying, hey, I bought this, I just shot out a bunch of emails for $65K, and then I got it, now I have it for $70K with the finance, whatever it is. And then you shoot out the email to a bunch of people looking to buy or whatever, and they're boom, 75K or 80K.
Yeah.
They're instant profit. Same with them. Hey, you're going to this. I'm selling Pokemon cards, whatever, eBay. Now you're making this little money here. Can you kind of explain that? And how many like side hustles are there like that in like your field?
So yeah, I mean, that what you're describing is wholesaling, and that's how I got started as well. That's how I kind of built my bankroll. And if you're listening and you don't know what that is, essentially in that video, what I was describing is I found a property that was distressed. It needed work and it just wasn't selling. It's sitting on the market forever. And I made an offer on it, and I got it under contract. I think it was like $70,000 in that video. And then I didn't want to buy the property. I simply wanted to have it under contract. Then I went out and I emailed multiple other real estate agents, buyer's agents that I found online, Coldwell Banker, Keller Williams, all publicly available. And I said, hey, look, I have this really good deal. If you have any clients that are interested in flipping properties on the street or in the city, let me know. I'm going to sell it, or I'll sign it for $75,000. So I have it under contract for $70,000, and now I'm getting it to an end buyer for $75,000, and I simply assign it. It's an assignment of contract. It's what it's called. It's a one-page form. I simply say that at closing, they're going to be able to buy that property at $75K. So the seller that I have under contract, he gets his $70,000. The buyer pays $75,000, and I keep that $5,000 difference. I never paid a dollar. I never got it under. I never purchased it. I never put any money down.
There was no risk involved aside from
no risk outside my time.
Yeah, aside from like maybe a couple no's via email.
Exactly. And in that video, that was actually true to as far as time. I think I might have spent a week on that deal as far as finding the unit, talking to the seller, putting it under contract, and then reaching out to agents, kind of negotiating with them, and then them finding an end buyer for $75K, where I made that $5,000 without spending any money into it. And that's very possible. I mean, that was a small deal. $5,000 is a very small assignment fee. I just did that because I know it would sell fast and I can make content out of it. But had I held out, I could have easily sold that for $8 to $12K.
Yeah, that's what people want to see. I mean, like in this world, everyone wants instant gratification, instant money. I mean, they see that, of course, that's fucking instant clickbait content.
Exactly.
But are there any other side hustles like that in the house buying industry, whether it be, flipping, whatever it may be?
There's a strategy called BRRRR, which I hate, but it's also really common. That's where you buy a property, you renovate it, you rent it, refinance, all that other shit.
Fuck, dude, you stole my next question, man.
Yeah, sorry about that. That's really the only other kind of hustle. Wholesaling is the truest one, where there's really zero money required to get into it. The BRRRR, you still need money down. You still need tens of thousands to rehab, and you still need to refinance. You need to qualify for a refi. So that's much more of an advanced strategy versus Section 8 even, because Section 8 you don't need to rehab a ton.
Yeah, no. The exact question I had was, do you follow any methods like BRRRR? I didn't know it was BRRRR. Like my real estate jargon's not too up to date, but like I said, buy, rehab, rent out, refinance, repeat. Is there anything that you can kind of give out on here that you follow? That's I mean, clearly not BRRRR.
Yeah. I mean, there's no non-pretentious way of saying this, but I follow my own strategy, which is Section 8, and I stick to it. The reason that BRRRR doesn't work, and it's really just good it's a good hype buzzword that I think people like to just get at.
Yeah, it seems like everyone on Facebook, this just seems like they're playing.
It's easy to sell courses on it because you can have this.
It makes sense.
Money.
Yeah.
Right. But this is how it actually goes down in reality, and this is where most people kind of don't really think too much into it. So you buy a property for, let's say, $100,000. You're putting 20% down minimum on an investment property, so you're into it for $80K on the financing, and you put $20,000 in. And now you need to rehab this property, and with the end goal of refinancing it. Well, if you refinance it, the property has to appreciate dramatically in value, so when you do your refinance, you can pull that equity out. So now you're spending, let's say, you need to spend $1,000 on this $100,000 house to really force a lot of, you need to do windows, you need to do appliances, all the stuff, roof, HVAC. To really get a good flip on the refi, you need to spend a lot of money on it. So that's going to take several months. You have 30 days to close initially when you bought it, and then let's say another 3 or 4 months of renovations, depending on how intense you want to go with it. And then you have to go and you have to rent it out. So you just spent $100,000 on a property. You might have spent another $40,000 or $50,000 on a rehab, and now you have to risk this property with a tenant that you just spent all this money rehabbing. And then after that, you have to go to a bank and you have to hope and pray that their appraiser agrees with your valuation at maybe, 180 or 200K. And then you have to wait another 30 days for that refinance to go through for you to get your equity out. And by the way, when you pull that equity out, you're going to have a much higher loan, and your cash flow is going to take a big hit on that because that tenant was in there before you did that refinance. So for the most part, the strategy normally fails in most ways, and you're left with a property with not much cash flow and all this upside risk with tenants that are going to be possibly destroying your unit that you just got done rehabbing. It's slow, it's cumbersome, it's expensive, and I don't know why anyone really teaches it.
So I know you just kind of named some of the bad parts of it. What is like the worst case scenario for some of these people that just seem like they're like, oh no, you just take $20,000 of debt on it. You do this to it, and you renovate. And I'm just like, dude, these guys are leveraged to the tits, dude. I mean, you see so many people like doing it. Like, what is their worst case scenarios? What I'm wondering.
Their worst case scenarios is there's a ton. One, you get caught holding the bag. I mean, if you're doing that renovation 3 or 4 months or 5 months, depending on labor, it could be a lot longer. If the market turns and the valuations drop or there's a correction, now you're stuck in a property that you can't refinance, and now you're going to have the most expensive rental on that block, and you're not going to be able to get the money out. And who wants to put a tenant in a $150,000, $160,000 house where you can only max out your rent at, I don't know, $1,500, $1,600?
Yeah.
So it's not going to be ideal. Second worst case is you spend all that money, you rehab it, and the tenant destroys it, and you're back to square one. I mean, which happens. I mean, you can screen tenants all you want, but at the end of the day, if they bring in a dog, or if they bring in a crazy drunk boyfriend or girlfriend and they wreck your house, you're fucked.
If you don't have the Section 8 checker coming in to make sure that they don't have the crazy
and if it's not guaranteed. That's the other thing.
Yeah.
And with Section 8, they have a lot to lose. If they wreck your house, they lose their voucher. They lose free housing for the rest of their life. That's a pretty big leverage point.
Yeah.
And the third thing that's the really downside of BRRRR is you're beholden to that appraiser. When you do that, your refinance, they're going to come out and appraise the value. If that appraiser doesn't agree with the valuation that you think it's worth, you're shit out of luck, So there's just a lot that can go wrong with BRRRR. And it's slow. That's the fourth longest thing. I mean, like I just mentioned, that timeline is a minimum 5 months to do it right, between the rehab, the refinance, and the initial purchase. So that's why I don't like it, and that's why I really don't see anybody reason people do it.
Do you have any like influencers that promoted a lot that you think are total schmuck scams that you want to call out publicly?
No, I mean, no. First of all,
we start FinTwit boxing matches for the finance groups.
No, there's no one that I would call out specifically, because I mean the strategy occasionally works, and that's why they push it. And that was originally, I think, coined on Bigger Pockets. I think one of the big hosts on Bigger Pockets came up with that BRRRR strategy. And I think if you have the deep pockets and if you have the time and you're able to do multiple BRRRRs at the same time, or you do it with a big multifamily where there's a big upside, it works. But for the vast majorities of new investors that are getting started in the space, pushing that as a way to get your money back out of the deal is just really bad. I mean, in my opinion, it's a really bad advice. As someone that's done it, I've done it multiple times. I've probably done 3 or 4 BRRRRs, and it's always taken forever. I got lucky where I was able to actually get out of them, but it was never some big, grand $30,000, $40,000 exit where I was able to go buy 2 or 3 more BRRRRs. It was close to break even, and I always thought to myself, like, why did I do that? That I shouldn't have done that 3 times.
So you said that you tried it 3 or 4 times. Is that how you found Section 8? Like, you were an investor, you were trying different methods, and then you came across Section 8, or was this your father? Yeah.
I found Section 8 by accident. It was a complete.
Yeah, I found it a Kendrick Lamar song.
Yeah, so I bought it. I bought a property for $55,000, 3-bedroom, 1.5 baths on Gore Street in Murder Row in Wilmington, North Carolina. And I was like, man, this is a killer deal. It was rented out for $1,350 per month. And I was like, I have to have this house. So I got a credit union to finance me back then, 2016, 2017. I got financing for it, 20% down. I think I financed 45 grand. My mortgage is $300 and some per month. And it was rented out for almost $1,400. So the day after closing, the buyer or the seller calls me and he's like, hey man, like we got to switch you over to Section 8 so you can get your checks. And I was like, what do you mean? Like, this is a Section 8 property. I didn't know anything about Section 8. And he just, like, on the phone, he's just like, how do you think I'm getting almost $1,400 a month on a $55,000 ship box? And I was like, fuck, you're right. Okay, that's why. Because Section 8 is completely value agnostic. It does not matter what the price of the house is. Section 8 will pay the same amount if it's based on bedroom count. So that's that. I started then. Fortunately, I got really lucky. The tenants were really cool. They're disabled and on disability, and I think they're also like retired veterans.
They can't fuck anything up.
Yeah, Section 8 paid 100% of their rent, so the literally $1,350 a month direct deposit in my account. I paid my little $300 mortgage. I paid my property manager 10%, so it's I think $130, $140, and I legit cash flow to like I don't know $800 or $900 on that unit. And then that's when the light bulb moment came on. I was like, I got to find as many of these as possible. And 600 units later, here we are.
That's a really cool story.
Thanks.
How long does it take to get 600? I mean, like, and then how does all the math add up for you? I mean, like you see your videos. I mean, it's like fucking 14 Rolls Royces and Lambos and shit. I feel like I'm watching the whatever Grant Cardone or whoever walks. Hey, look at all the welcome to my garage video.
Yeah, I know. As far as scaling there, that's a different story. It's actually a lot easier to scale because it's all leveraging other people's money. The hard part is getting started and building a track record where then you can come up to guys like you and say, hey, look, if you have $100,000, I'll invest that for you. I'll do the financing, you bring the cash, and we'll split the cash flow. So scaling is really the easier part. And it's real estate. It's not a startup you have to sell somebody on. It's like, hey man, here's a house. It's going to make $500 a month and it's guaranteed. Do you want to jump in? It's like, well, fuck, all right. Like, there's really not any downside. It's very hard to play devil's advocate on that deal. So almost anybody that you reach out to that has the liquidity and the availability and they trust you, it's pretty easy sell to get that going.
Do you like run, are there like companies that do, like, do you run a company specifically for this, or is this all just like handshake, you gotta trust me type shit?
Oh no, I mean it's all like legit deal. So when I had partners, when I had partners, they all wanted. We had operating agreements, we had joint LLCs, we had joint bank accounts, and I always did it on a partnership basis. I never did like hedge funds or any type of investment fund. I just didn't want to deal with all the regulation and compliance, everything that went into that. So I just got like, hey, here's a partner. He's going to bring $1 million to the table. I'm going to finance the deal, and we'll split the cash flow 50-50. And I just kept it simple, and it was able to scale to over 600 units. And then eventually I started doing cash out refinances where I would get the equity out, and then I would buy out my partners and keep the units to myself. So that's how I was able to grow so fast.
So with like inflation going up and like the housing market, how it is, and I imagine like a lot of more people are in these Section 8 situations. Have you seen like a rise in delinquency or like people not yet, or just any situation of like, not delinquency, but just people getting kicked out more or less, or
out of my houses or in general?
I guess either.
In my houses, no, because we screen them really aggressively, so we know their financial situation, to a pretty scary level. So we know exactly how much they make. We know exactly what their liabilities are.
So it's not like The Big Short where strippers' dogs are like getting houses.
No. They have to have a voucher. They have to be approved through Section 8. So Section 8 is going to be backing their rent, and their portion is very little. So let's say I have a $1,400 a month rent, and the tenant's portion is $150. So I'm always going to have the balance paid by Section 8, and my max liability on that one tenant is going to be $150, max $200. I don't think I have any tenant in my entire portfolio that pays more than $200. So if they don't pay for a month, it's not the end of the world. I'm still getting enough money to cash flow and also pay down my debt, so it doesn't really matter. At that point, it's simply working with a tenant to get paid by the 10th.
Has the kind of overall market, like like the conditions itself kind of affected your day-to-day business? And if so, like what exactly and how are you kind of combating that?
So Section 8 is in a vacuum. It's completely separate than the rest of the market. And this is what like a lot of people don't understand is when you're buying properties under $100,000, for the most part, that's my normal buying criteria. These are not the same properties that are $250,000, $500,000 that you see in the news all the time, that you see, you know, BlackRock and all these other big hedge funds buying into and kind of raising, you know, the market price. This $60,000 house in Jacksonville, North Carolina, it's going to be a $60,000 house, even with inflation, even with market adjustments. It might go to $70,000. It's not going to really matter. And now let's say your interest rates go up from 4.5% to 8%. You're financing $55,000, $60,000, man. It doesn't matter. The monthly payment difference might be $100, you know? So it's a whole different world when you're dealing with low income. The other big advantage to it is the liquidity. When you have a $500,000 house, it's that much more difficult to sell than a house for $100,000. How many more people can afford a $100,000 house versus a $500,000 house? So quite literally at any point in my portfolio, I can say, hey, I don't want these 20 units. Let me just go peel them off, put them on the market individually and sell them at retail. So it's almost as good as having cash in the bank when you're dealing with low income housing.
Yeah. What's your kind of outlook on your personal future growth? I mean, 600, I mean, how much managing do you do? Like, do you outsource all that? I guess if government takes so much part in it, I guess like you just kind of, do you chill? Like, how do you look for what's next?
Yeah, for all intents and purposes, I do chill. I have 8 full-time property managers in 4 states. So
that's a good quote. For all intents and purposes, I do chill.
and I mean, it is true because I have weekly calls on Fridays for 2 hours on a Zoom call just like this, where I'm talking to everybody, approving any big expenses that are going to be coming up. Anything that's outside of their kind of approval limits, which is normally around $1,000 depending on the property manager. And at that point, we'll go through them. We'll bounce ideas off each other, see what's going on in the market. And then they also kind of double as my acquisitions managers. So my property managers are always out in the streets. They're always showing properties, getting leases signed. And they're like, hey, this unit's about to go for sale. You should buy this one. So I would say collectively on 600 units, I might spend 10 hours per month managing them. That's why it's truly about as passive as you can get. Obviously, it's never been like that. My first, I would say 10 or 15 units, I was involved. I was, dealing with property managers directly. I was dealing with tenants directly at the beginning. It definitely takes some active work to get it to as passive as I got it. You just have to have the systems and software in place and people to make it work, just like anything else.
So whenever you were doing this, were you kind of looking? I know you told us how you found out about Section 8, but were you looking for a passive income kind of situation, or did it just like fall on your lap?
When I first started, it was also an accident. So I had a condo that I bought with an FHA loan with 3% down. I was upside down as hell on it. So after a year of living there, I wanted to move because I got a big ass Doberman Pinscher and he couldn't live in that condo anymore. So I bought another house. And when I bought that second house, I couldn't sell my condo because I owed way more than it was worth. So I just decided to rent it out. So I found these 2 really good tenants, and they were roommates and they shared it. And I was making like $400 a month cash flow. And that's kind of where the initial like, holy shit, I'm making $400 a month without doing anything. They never called me. I just get at the time I was using Venmo. They would Venmo me the $1,200 rent or whatever it was every month. And then they continued to do that up until the point about a year in, I was using Venmo so much that Venmo banned me for 99 years. And then
I'm banned from Venmo too, dude. Nice.
Yeah, I used it for too much for commercial purposes. So they gave me a 99-year ban, and then I just continued doing it that way. I got a condo, I rented out. Got a condo, rented out. I tried to buy one per month. At that time I was buying them for $70,000. 20% down is $14,000. Closing costs another 2 or 3. So I knew I needed $17,000 every month in order to buy a unit. How did I do that? I went wholesale deals. How did I do that? I reinvested cash flow from my first 1 or 2 units. I reinvested cash flow from wholesaling from my marketing company that I was making, I think, like $4,000 or $5,000 a month on. So it was just really just grinding for each deal.
So one thing, obviously, I want to talk about your other ventures. Obviously, you do a lot of social media and you do TikTok. And for anyone that's listening that doesn't know what TikTok is, it's an app for like 1 to 2 year olds. But I'm just fucking around. But so how did you kind of get into that, and how did it kind of, why do you think it was like good for you to get in there, and What's it provided for you?
Yeah, so I mean, when I started, it was March 16th. It was my birthday, 2020. Also the day they declared the pandemic. I was kind of already in quarantine in Wilmington, and I was hanging out with my parents and my sister. She'd come down from Philly, and she was like, you need to check out TikTok. So of course, I got stuck in a 4-hour rabbit hole of TikTok. And I was like, well, fuck, I have so many good videos just like in my camera roll. And the last really good one I had was a few months before, for Christmas, I gave my dad a new car. And he had a really emotional reaction. So I posted it, and it got 15 million views, and I got 45,000 followers overnight. And I was like, hey, there's something to this. Because I've been on Instagram
Why
and
is
Facebook.
my phone going off all night?
Yeah, it actually died from vibrating so much. But up until that point, I've been on Instagram and Facebook for years, and I've never had anything go viral. And the first video I posted on TikTok, they got me. So from that point on, I just started posting a bunch of content. I started talking about real estate. People got interested in it. I started explaining about my portfolio. And then I'm really into cars. I'm really into kind of traveling and houses and stuff. So I was remodeling a house at the time. So all that just like organically blew up. So I mean, I went from 0 to 1 million or almost 1 million in about a little over 2 years.
How else do you kind of diversify your portfolio overall? I mean, you like different streams of income. Like, do you have a Roth? Like what stocks, shit like that?
Yeah, no. I have a 401k that I had from my original marketing company that I contributed to, but throwing in a little $57,000 a year really doesn't do much for my tax shelter every year. So I still do it. I still have it. But that's really the extent of my like stocks or financing or equity. Everything's in real estate. I just found something that works and just kind of double down, triple down on it. But no, I don't have any other investments outside of real estate.
Are you going to be buying Section 8 housing in the metaverse?
I am. Sorry, hold on. I am not going to be buying any type of properties in the metaverse. I never got into crypto. I never got into NFTs. I never got into any of that. I just kept my head down and kept buying 20 properties a month, and that seems to be working out pretty well.
All right. Well, before we kind of get into your course, so you can,
Sure.
so you can promote that, we have one more thing, which was can you kind of give us your craziest tenant stories? I'm sure there's got to be some wild ones or notable people. Like I want some juicy ones, man.
Yeah, I mean the biggest one, the most famous tenant that I have on my TikTok is Sticky. Sticky is a tenant that I've had for years, and he's gotten collectively over 10 million views on my TikTok. So whenever he messages or reaches out to me, it normally becomes content. But it started off by, long story short, because this is a very long story. My property manager was driving by his house in downtown Wilmington, North Carolina, and realized
it can go the whole thing, dude. We're only at 30 minutes. I'd like a good 45 out of this.
Okay, well, I can give probably a 5-minute story. So anyways, he was driving by and saw that there was a for sale by owner sign in the front of the house, and he calls me and he's like, hey, are we selling some houses downtown? And I was like, no, man, like I don't really sell houses, so no. He's like, well, we're over here on 8th Street and you have a house for sale. And I was like, no, you got to go knock on the door and see what the hell's going on. That's Sticky's house. When he told me the address, I knew exactly which house it was. And he goes and knocks on the door, and there's these people that he had never seen, I had never known about. And he's like, yeah, we bought this house a couple of days ago from, I guess the man that was living here before. And my property manager was telling him like, yo, like, he didn't own this house. Like he went by Sticky. How did you pay for it? Like, the title was still in my name. It was still registered to me. I checked the tax records. And they're like, oh no, we just went to the bank and we got him like a certified check for $10,000 as a down payment. And we were just gonna pay him $1,000 a month. And I was like, yeah, but did you not go through an attorney or anything? They're like, nah, we just kept it on the down low. And I was like, oh fuck, okay. So dude took off to Florida, my tenant. And
that's not good.
Yeah, these people think that they own this house now. So I had to call Sticky, and I was like, look, man, I need that $10,000 back as soon as possible. Like, your options are either just send it back to me or wire back to me, or I have your social security number, I have your driver's license, I have your entire background check. Like, I could easily forward this to anybody if you really want to go that route. And he's like, no. Like,
yeah, you just start blackmailing him. Fuck it.
Yeah. Straight up told him about, like, this is what's going to happen. So he sends the $10,000 back. And then, coincidentally enough, I actually end up seller financing the deal to that actual person that bought the house, like correctly, and sold it to her. And then moving forward, fast forward like 6 months, didn't really hear from him. He reaches back out and he was like, hey man, I need to rent another house from you. And I was like, dude, there's no fucking way I'm going to rent you another house. Like, you just try to sell my house and scam some lady. Like, it's not going to happen. And he was like 100% serious. And I was like, there's no way. And then he was like begging for it. He's like, what if I paid the entire rent up front for the year? And I was like, okay, well, then you got my attention. So I was like, I'm not going to risk it on a decent house. I was like, look, I have one house that I legitimately can't keep a tenant in for more than 90 days. There's definitely paranormal activity in this house. If you want it, I will rent it to you, but you need to prepay. It's going to be $1,500 a month. You need to give me $16,000 as a wire ahead of time.
This guy's financial situation must be fucking crazy.
Yeah. Yeah. So he sells it to me in like $3,000 or $4,000 payments over the next couple of days. And I was like, all right, I sent him the lease. And very normal. Should have been my first red flag. And I told him, I was like, look, man, you need it. You're also going to sign like a disclaimer saying that you understand that there is paranormal activity. And the first question he asked, which I'll never forget about it, actually.
Wait, that's a real fucking thing.
This is a real fucking thing.
I thought that was just like the Nathan For You episode where he just got the ghost realtor and he's like, we're going to get an exorcist to come in this house. But how did they prove there's paranormal activity in the house in the first place?
So I had probably 3 or 4 tenants in that property that I leased to, and every single one of them said that they either felt dread when they walked in the house, or sometimes at night they would like have the doors closed in the property, and they wake up and every bedroom in the door, every door bedroom in the house would be wide open, windows open. They would hear footsteps, all sorts of crazy shit, independently verified from different tenants, and they all moved out. I ended up refunding maybe 3 or 4 different security deposit to the point where I eventually started saying, look, you need to sign this saying and you understand there's like some ghost, some weird shit here.
The new guy ends up fucking the ghost.
Yeah, so I kind of knew that when I bought the property. When I went there, I never really believed in it until I went in there and kind of felt the whole energy of the place is just awful. You go in there and like there'd be cold spots in the house and like just hair on your neck would go up. And
did you ask for the history of the house?
No. So
we didn't give a shit about that.
I only found out afterwards. So right before our closing, I was like, they wanted $75,000 for it. I said, there's no way. Like, I really don't like this property. I didn't even want to be in it. It just felt really bad to be in that house. And they're like, look, well, what would you give us an offer? Any offer? And I was like, I'll give you $50,000 for it. And they're like, all right, that's fine. And I was like, shit, like I wasn't expecting them to accept it. I take the $50,000 offer, close on it, and then had a hard time trying to rent it out ever since. So when I told him about it, his first question was, is the ghost black, white, or Mexican? That was his first question. Wants to know
that's a big
the racial background of the ghost. And I was like, dude, I have no idea what race they're comprised of, but if you want the house, you can have it. And so eventually he moves in. A couple of days after he moves in, I get a contact from Zelle fraud department. Of course, he had borrowed that money from his baby mama, and I was like, what's the problem? And he's like, she didn't know that I borrowed it. And I was like, so you stole the money from your baby mama to pay me the $16,000 in prepaid rent for the year? And he was like, well, I wouldn't call it stealing. Well, I was like, all right. So they charged it back. They got all the money back, and he's living in the house. At that point, I was like, I just give up, man. Like, you can just live there for a year for free. But every conversation we have, I'm going to record it, and I'm going to use it as content. And so that's what I've done ever since.
Dude, I'm from Alabama, but how racist do you have to be concerned about the race of a ghost? Like, oh, I'm not living with no Mexican ghosts. That's where I draw the line. That's crazy. That is.
Yeah, that was his first question, because he said he thinks he could fuck with some black ghosts because he's from Chicago. And I was like, well, for what it's worth, I don't know. I don't know their names. But the only thing I do know is the person that ended up dying there was murdered. Elderly lady was murdered in the living room in the late 90s. So I guess she's still walking around there. I told him that it's probably a white ghost after he really pressed me for it. But
he was just looking for a place with a little adversity, man. I guess.
I guess. That's crazy. But then I've also had tenants, I've had stories where I've bought properties in pretty rough areas, and I've had property managers go to show the units to a potential tenant, and there'd be like drug deals going on in front of the house, and they've gone and like knocked on windows and asked them to move to the next block. Like, things like that happen all the time. Like, you got to do what you got to do in order to get the
like
deal.
In Step Brothers, wherever they're trying to prevent the neighbor from moving in.
Yeah, exactly.
All right, so you do have a course. You do talk about and have all your tricks of the trade and all your secrets on there. Do you kind of want to dive into that real quick?
Yeah, let's give a quick overview. So I do have a $5,000 course. It's called Section 8 Secrets. It's a full-blown 7-video module, about 3 hours of Section 8 only content. Explains how to find the best properties, how to choose the best markets, how to screen tenants, how to scale, how to use other people's money, how to get creative financing if you only have a few $1,000s or bad credit. It's still possible to buy units. I also have a Discord where I'm in there answering questions every day. And then I also have monthly Zoom calls where we get on a Zoom call like this, and I have about 50, 60 people in there.
$5,000 course. That is a shit ton of money. Is this all paid up front? Is this a monthly thing?
It's paid all up front.
Okay. How can you convince people that's worth $5,000?
Yeah, I mean, 15 to probably 20 people sign up every month. So the reason why is it's the only one out there. It's the only Section 8 exclusive course on there, especially taught by somebody that's scaled to 600 units in less than 8 years. And two, if you're investing in $100,000 worth of assets on a rental property or 80,000, 5,000 is a small price to pay to really understand how to do it. Because if you think about it, you buy a property and you don't know what you're doing, or you buy in the wrong area, or you put the wrong tenant in there, or you use the wrong loan, you're going to lose way more than $5,000, trying to figure out.
You don't need any licenses or anything to do what you're doing.
No licenses. No.
So I guess you could say this is the tuition.
Exactly. I mean, you could very well go and buy a property without going through the course or really learning anything about it and just kind of figure out as you go. But you don't know what you don't know. And that's what will screw most people. I had a coaching student the other day call me before he bought my course. He bought a property, and it was a studio property. He spent, I think, $70,000 for this property in, I think it was like South Carolina. And he went to go to Section 8 the property in an area where it's like predominantly Section 8, and he can't because Section 8 will require a minimum of 1 bedroom. So this guy spent, $70,000 on a property that he can't Section 8 in an area where it's mostly low-income people. So I can't imagine what he's doing with that unit now. He doesn't want to live in it, and putting a tenant in there that's going to be low income, that's not guaranteed, is probably a pretty terrible proposition. So it's just things like that come up that will screw a lot of people.
Okay. Do you have a how to deal with squatters course in there?
There's modules talking about tenants that overstay their tenancy, or if people move in, exactly the best way of getting rid of them. It's very easy.
All right, and this is a personal one for me. What about the $1 houses in Chicago, shit like that? Can you explain that? I see the thumbnails, but I don't really get it.
Yeah, I mean, Detroit and Chicago have a ton of these properties that are just stupid cheap. It's just because either there's a bunch of owed taxes on it and the owners can't pay it, so they just literally want to get rid of the property, and they're in areas that you just can't do anything with, or the property's gotten in such bad disrepair that they can't afford to fix it and they just want to get rid of it so they can avoid taxes and insurance and everything else. So, or it's getting condemned and they want to get rid of it before the city or the county gets involved. There's a million reasons why somebody would sell a house for $1, but those are properties that you never want to buy.
Okay. Yeah, I probably should have just watched the video instead of just looking at the thumbnail. All right, man. Well, Mitch, do you have anything else for him before we have to go?
No, thanks, Tom.
Yeah, no problem, man. Thanks, guys, for having me.
All right, of course, man. And do you want to let them know where to find you on Twitter, Instagram, TikTok, etc.?
Sure. So the course you can find at section8formula.com. That's the number 8. And then I'm everywhere on Cruz NC. That's TCRUZ NC, like North Carolina. And I'm responding to DMs myself. I don't have any teams or anything handling that. So if you have any questions about Section 8 or real estate, you can just reach out directly on there.
How many times do you run into the Tom Cruise issue?
Just only for the last 25 years.
Yeah, I know. That's got to be a motherfucker. All right, man. Okay, well, I hope you have a great rest of your day. Thanks so much for coming on.
Yeah, no problem. Thank you.
All right, take care, buddy.
Bye. Later.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.